Here's why. The impact of tax preparation software and preparers on savings. Tax preparation software and tax preparers can significantly impact your savings. While these tools can make tax filing easier and more efficient, they often come with a cost. This cost can be substantial, especially for those who rely on these services regularly. The cost of tax preparation software subscription fees. Many tax preparation software programs require a subscription fee, which can range from $20 to $100 per year, depending on the software and its features. Here's a breakdown of the two types of tax credits. Types of tax credits. There are two primary types of tax credits, refundable and non-refundable. Understanding the difference between these two types is crucial for maximizing your tax savings. Refundable tax credits. Refundable tax credits are those that have the potential to pay you back. These credits are designed to provide a direct benefit to taxpayers, and they can be claimed even if the taxpayer owes no taxes. The key characteristics of refundable tax credits are: they can be claimed even if the taxpayer owes no taxes. They can be used to offset any tax liability, including the amount owed. They can result in a refund if the credit exceeds the amount owed. Examples of refundable tax credits include the Earned Income Tax Credit, EITC, the Child Tax Credit, the Premium Tax Credit. Non-refundable tax credits. Non-refundable tax credits, on the other hand, cannot pay you back and can only be used to reduce your tax liability. They can only be used to reduce tax liability, not to offset it. These credits can be used to offset the amount of taxes owed, or they can be carried over to future tax years. In this article, we will explore the different types of federal tax credits available to taxpayers. Types of federal tax credits. Earned Income Tax Credit, EITC. The Earned Income Tax Credit, EITC, is a refundable tax credit designed to help low to moderate income working individuals and families. To qualify, taxpayers must meet certain income and eligibility requirements, which vary by state and filing status. The age requirement is not a hard and fast rule, but rather a guideline to ensure that the individual is not simply taking advantage of the program for personal gain. Introduction. The Disability Tax Credit, DTC, is a non-refundable tax credit in Canada that provides financial assistance to individuals with disabilities. The program aims to support individuals with disabilities in their daily lives, allowing them to maintain their independence and participate in various activities. In this article, we will delve into the details of the disability tax credit, including its eligibility criteria, application process, and the types of expenses that can be covered. Eligibility criteria. To qualify for the disability tax credit, an individual must meet one of the following criteria: be over the age of 65, have qualified for the disability tax credit at some point in the tax year, have a severe and prolonged disability that prevents them from carrying on a substantial gainful activity. The age requirement is not a hard and fast rule, but rather a guideline to ensure that the individual is not simply taking advantage of the program for personal gain. For example, if an individual is claiming the credit solely for personal gain, such as to reduce their tax liability, they may not be eligible. Application process. The application process for the disability tax credit is relatively straightforward. The benefit is paid to the parent or guardian who is primarily responsible for the child's care. Eligibility criteria. To be eligible for the Canada Child Benefit, families must meet certain criteria. These include being a Canadian citizen or permanent resident, having a child under the age of 18, having a net income below a certain threshold, residing in Canada. Application process. The application process for the Canada Child Benefit is relatively straightforward. Families can apply online through the Government of Canada's website, or they can submit a paper application. The application process typically takes a few weeks to complete. Types of benefits. The Canada Child Benefit is a tax-free monthly benefit. It is paid to the parent or guardian who is primarily responsible for the child's care. The benefit is based on the family's net income and the number of children they have. Amounts and eligibility thresholds. The amount of the Canada Child Benefit varies depending on the family's net income and the number of children they have. The benefit is paid at a rate of $164 per month for one child, $164 per month for each additional child, and $164 per month for each additional child after the first two. Tax implications: the Canada Child Benefit is a tax-free benefit. The payment will be made via direct deposit, and you can track your payment status online or by contacting the IRS directly. The Economic Stimulus Package, a comprehensive guide understanding the basics. The Economic Stimulus Package, also known as the American Rescue Plan Act, is a comprehensive plan designed to alleviate the economic impact of the COVID-19 pandemic. The package aims to provide financial assistance to individuals and families affected by the crisis, helping them to cover essential expenses and maintain their financial stability. Key components: direct payments. The package includes direct payments to eligible individuals and families, with the maximum basic amount being $1,590 for individuals and $2,739 for families. Automatic payments. Eligible recipients can expect to receive automatic payments on specific dates, including July 11, 2025, and October 10. Payment method. Payments will be made via direct deposit, providing a convenient and efficient way to receive funds. Asterisk tracking payment status. Recipients can track their payment status online or by contacting the IRS directly. ##### eligibility and application process *** eligibility and application process. Eligibility criteria to be eligible for the economic stimulus package. Individuals and families must meet specific criteria, including income level. Recipients must have a low to moderate income, as determined by the IRS. Family size. The package is designed to support families with children, as well as individuals who are not part of a family unit. Residency. Recipients must be U.S. Why you should file your taxes early. Filing your taxes early can have numerous benefits, including avoiding additional charges and penalties. By submitting your taxes before the deadline, you can ensure that you receive your refund as soon as possible. You'll avoid the stress and anxiety of dealing with the IRS during peak filing season. You'll have more time to review and correct any errors or discrepancies in your return. You'll be able to take advantage of any tax credits or deductions you're eligible for. The consequences of filing late. Filing your taxes late can have serious consequences, including additional charges and penalties.